Hello and welcome. So today we are going to learn about a new indicator, another indicator. Earlier we studied about MACD, moving averages, convergence, divergence. Okay, so we have learned why that indicator is so famous and everything around it. Now we are going to the next indicator, or I must say the previous indicator. See, moving averages, convergence, divergence, MACD. So, but what is moving averages? We need to find out that answer before going to MACD. So let's go back to moving averages. So what is the concept called moving averages and why it is so famous and so important that people who are looking at candlestick might also like to add moving averages lines in the chart. So let's begin with the topic. So first and foremost question is what is moving averages? What is moving averages? So moving average is an average of data points. Okay, this usually is price at this point. Moving averages, you can just take an average of all the data points. See, here price is 21,894 in Nifty. At this point, what is the price? It is 21, around 21,700. At this point, it is somewhere in between 21,680. So these are various points. So this is a point. So this is a point. This is a point. This is a point. If you average all these, you can plot a line, right? In this graph, you can plot a line. So this line usually called as moving average. This line can be easily called as moving averages. So an moving average is an average of data points for a specific time period. Here you can see the time period. The time period which we have selected is 15 minutes. So this, whenever we will plot a moving average line, it will be for 15 minutes. This moving averages will be like this. What will it usually do? It will usually follow the price. These moving averages, they usually follow the price. Why is it called moving? Because each data point is calculated using the data from previous period. So at this point, moving average, here it is calculated by previous data point. It is calculated because it averages the prior data. The behind the data which it is mentioned, the data is averages calculated. So average moving averages is smoothed and the price data to form a trend following indicator. So this is a trend following indicator. See, whenever the trend is there, the price usually this moving averages, it follows the price. So the main significance of using it is you are following the price. If the price is going up, moving average will follow it. It will also go up. If the price is going down, so moving average will also follow the price. It will also go down. So this is the significance of moving average. What is the best way of using the moving averages? Right? So moving averages, see, moving average doesn't predict the price direction. Okay, it simply follows the price. Okay, one thing you have to keep in mind: this moving averages doesn't predict the direction. If the market is going up or market is going down, moving averages don't give an indicator that the market will go up or down. Market is dynamic in its nature. Market will be following its own course. Moving averages just defines the current direction. What is the current direction? Just you need to have a look on moving average and you will get the idea of the direction of the market. So best way of using moving average is to identify the direction of potential support and resistance. So moving averages, these indicators like MACD, Bollinger Bands, these all use the moving average concept. They all use the moving average concept. Moving average is the basic building block of these higher, highly level calculated indicators like MACD, Bollinger Bands. Moving average is the smaller integral part. So I have made this video on that purpose, that if you are going for the advanced level MACD, so you need to have an idea what is the moving average role in that particular indicator. So for that reason, I have just I have made the video for moving averages. Okay, let us plot now. Let us plot this moving averages in our chart. So what you have to do? You have to do this way. Study, add study. You have to go here, average. See, average in the chart indicates as moving average because there is no average, no still or stationary average. There is always a moving average. Okay, always keep this in mind. And there are different types of average also. Moving averages, you may find different type of moving averages. Now let us see how many types of moving averages are there. First one is simple moving average. Second one is exponential moving average. Third is trend based. Fourth is volume based. Fifth one is weightage based. But the thing is like we use only two types. Always remember this. We use two type of moving average. Simple and exponential. Simple moving averages can be defined as SMA and exponential moving averages can be denoted as EMA. Okay, simple moving averages take all the data points and exponential moving averages take important data points. Just the difference between these two moving averages is simple moving averages take all the data points available and exponential moving averages take the important data points in the meantime. Okay, so now let us plot a simple moving average in our chart, and this let me zoom it to 3 size 3. Okay, now this moving average you can see earlier I had drawn a just now I have drawn one blue color line, so that you can just see here. Similar way I have drawn. Now you can see this line which we are seeing, this is the moving average. Okay, the moving average, this is following the price. When the price is going on upside, you can see here price price is going up, so moving average is following that price. Moving average is going upside. If price is coming downside, moving average is following the price. Okay, moving averages is following the price. Always remember, moving averages work is that it will follow the price. So how to use the moving averages? How to use the moving averages? You can do a simple method called crossover. Now this is a 10 period moving average. Now what you will do is you will add another moving average in this same graph. Same graph, what you will do? You will add a 20-point moving average. 20-point moving average. If you add both of them, now you can see in the chart. You can see in the chart, let me show you. See this part you can see a crossover. And this part you can see a small crossover. This part you can see a crossover. These are few points. This part you can see a crossover. So what are these crossover? What are these crossovers? See, when this bigger average is 20 period and smaller average is 10 period. This is obvious. 20 is greater than 10, right? So when 10 will be more sensitive towards the price change. Okay, 20 it will come slowly. 20 will change its direction very slowly. but 10 is very sensitive. 10 period moving average will change its direction quickly. So when this crossover happens, when the 10 period cuts the 20 period from the upside, it shows as downtrend. And when the 10 period cuts the 20 period line from it comes here it cuts from upside, so the trend is down, and here it comes it crossovers from the below, so it is upside, uptrend. So this is the moving average, and in this people can easily judge where the direction of price is going to go. It works very well in the trending market. As I told you, during MACD also, MACD is a higher version. This is a basic version. Moving average, this form of indicator, if you are using, this is a basic version, and you will get entry very late. Here the market is going to change the direction, but here you are finding the crossover. But when you are entering here, you will get small profit. You will not get a big profit. You will get a small profit. But the thing is like, this is the limitation of this indicator. Okay, this is a basic indicator. MACD is a higher level of this moving average. Okay, this type of crossover, if you want an advanced feature, so MACD is advanced and moving averages, this is a basic. But for learning the advanced, you need to go well with the basic. So this is the basic feature, this is the basic moving average line, and this crossover, this kind of crossover, it gives us late entry, very late entry. So since you are getting a late entry and you are lagging behind the market, so this is a big limitation for users of this indicator. But you need to have the knowledge of this indicator. So next video, will come up with a higher topic. Okay, and this video, learn from this video about the moving averages, and after that you can watch my moving averages convergence divergence MACD video. Okay, so here I'm going to end this topic to now. Please share and subscribe. Okay.